Good morning and welcome to the Business Update segment, where we bring you the best in the world of business. On today's story, beginning with Dr. Ernest Addison, the Governor of Bank of Ghana, has expressed confidence in the bank's enhanced ability to shield the economy from external shocks and sustain stability in the foreign exchange markets. This confidence is rooted in a favorable external position and strong reserve built up during the first half of 2024. In a recent press briefing after the 119th Monetary Policy Committee meeting, where the committee decided to maintain the policy rate at 29% for the third consecutive time, Governor Addison highlighted notable improvements in Ghana's external payment positions. He attributed this improvement to several factors, including positive impact of the domestic gold purchase program, which also he made it understand that has accelerated reserve accumulation beyond initial projections under the IMF-supported program.
To 1.81 billion US dollars in the first half of the year, compared to a surplus of 1.6 billion US dollars recorded in the corresponding period of 2023. Total exports increased by 1 billion US dollars to 9.23 billion US dollars, while imports rose by 884.5 million US dollars to 7.42 billion US dollars. The increase in total exports was largely on the back of strong growth in gold and crude oil exports. In the first half of the year, the value of gold exports increased by 46.4% to 5.04 billion US dollars. While earnings from crude oil exports increased to $2 billion from $1.7 billion in the same period last year. In contrast, cocoa exports, both beans and products, declined by 47.4% to $760 million US dollars in the first half of 2024, from $1.45 billion US dollars in the first half of 2023. Other exports, including non-traditional exports, also declined by 8.7% to $1.5 billion US dollars over the same comparative period. Total import bill also increased, driven by both oil and non-oil imports. Oil imports increased by 6.1% to $2.3 billion US dollars, while non-oil imports increased by 17.2% to $5.1 billion US dollars. Consequently, the total import bill rose by 13.5% to $7.42 billion US dollars in the first half of the year. The current and capital accounts improved over the period, supported by higher external inflows and lower outflows. The improved trade surplus alongside higher remittance flows resulted in a higher current account surplus of $1.28 billion US dollars in the first half of the year, compared to a surplus of $863 million US dollars in the same period in 2023. Staying on the course of fiscal consolidation path for the rest of the year should lock in stability in the overall macroeconomic conditions. On price developments, there is some uncertainty regarding the inflation path for the year, given the recent exchange rate pressures, upward adjustment in utility tariffs, and increases in export fuel prices. The above developments have resulted in a slightly elevated inflation profile for the year. Even though inflation is expected to remain within the target year band, the risks are tilted slightly on the upside. This will require maintaining the strong monetary policy stance, supported by strong fiscal consolidation efforts, including remaining vigilant to ensure that the end-year inflation objectives are achieved. Given these considerations, the committee decided to maintain the policy rate at 29%.
Regarding the exchange rate, Dr. Ernest Addison mentioned that while the central bank has implemented measures to ensure stability, they anticipate certain developments to positively affect the local currency.
In a sense, when Bank of Ghana says we expect relative stability to the exchange rate, we expect the exchange rate to be, within single-digit depreciation. That should be stable in relation to a single-digit inflation objective. At the end of the day, it's inflation differentials which matter between